All right, let's get the show on the road. Welcome, everybody. We're excited for this webinar. We have a great guest today, Mike Rivieccio with Stockton Mortgage, 20 years in the business. And as an agent myself, and also the founder of Real Trade, a lot of objections that I've been getting on a personal level, and I'm hearing from all the 1,400 agents on Real Trade is, hey, how do we handle this high rate environment, right? That has been one topic that's been on topic of everybody's tongue. Of course, the rates are going up. So we're excited to have Mike Rivieccio with Stockton Mortgage here to outline what we can do as an agent to handle these objections and how we can facilitate, the sale of real estate. And that's our job, right, as an agent here, is to help facilitate the sale, meeting the minds of the buyers and sellers. So we're excited to do that. So Jim, why don't you do an introduction to yourself here of what you do as well?
My name is Jim Brown. I am the founder at James Brown Law, New Path Title, and Title Leap. I have a lifetime in the business, helping realtors get to the closing table.
Awesome. We host this great webinar together. Again, my name is Ryan Poole. I'm the founder of Real Trade. It's an online marketplace and social media platform for real estate. Cool thing, it's free for agents and you get free leads and you can sell properties quicker. I tell everybody, check it out at realtrade.io. And without further ado, we're going to introduce Mike Rivieccio with Stockton Mortgage. Let's help these agents, Mike, navigate this high rate environment. And we're excited for the presentation.
Mike, a couple of things before, just housekeeping before we get started. Mike's going to present for 30 to 40 minutes. If you guys turn your cameras on, it makes it easier for us to gauge your reactions, whether people are understanding or not, move on, see hands raised, things like that, if you can. Mm-hmm. And at the end, there will be a question and answer period. So save your questions. You can throw them in the chat, chat feature. And then future topics that you want to text me about, you can text me and we'll go over, or you can put them in the chat string and we'll go over them in the future. And that's it. Sorry. Perfect.
Awesome, Mike.
Hey guys, Mike Rivieccio. Most of you know me. I've been around town a little bit. And I want to welcome you to an educational little breakdown of what we've been seeing in the market and what Jim, Ryan, and I have been discussing for months and months and months is bottlenecks. We all have them. We all have bottlenecks. We all have misinformation in the media about, the market crashing, not crashing, what that means, what rates mean, what LLPAs, all this stuff that don't really make sense unless you're in this game. So I'm going to start with a couple things that have worked for my big real estate agents and got deals to the table that probably wouldn't have if they didn't have data. So the first thing we're going to start with is what's called a rate buy down. A lot of my successful real estate listing agents, this is for you listing agents, we know that comps are still showing your properties as a certain number. The seller can see it on the internet. You can pull it up in comps, but there's a stall right now with a buyer stuck at where they want their payment to be and a seller stuck at what price they want. So we have a little sword fight between the seller and the buyer on what they want to pay, not so much on price. I don't really get a bunch of feedback on price problems. It's really the buyer only wants to know about what their payment is, and the seller wants to know what their bottom line number is, right? It's a simple fact of add and subtract. What we have found is the listing agents that provide the proper data, like, hey, Mr. Smith, your house in XYZ neighborhood is worth 1.2 million according to the comps, the sales in the last 6 months, right? The same square footage, we can all figure out square footage, and it has a pool, doesn't have a pool, blah, blah, blah. We can go to Mr. Smith and say, I'd like to list your house for $1.2 million, but the public is saying, I have no problem when the rates are at 5.75% to pay $6,000 a month for this property, which equated to $1.2 million, but rates are at 6.75%, let's say. This is all for example. At 6.75, the consumer doesn't want to pay $7,000 a month for a $1.2 million property. So they're kind of hesitant to pull the trigger. Listings are sitting a little bit longer because of the number. The number does make sense to the listing agent and the seller, but the buyer, that $1,000 a month is the deterrent for them to pull the trigger to buy that house because they want to feel value also, right? So a lot of my successful listing agents are saying, listen, it's probably worth 1.2. The data shows it's worth 1.2, but it's probably going to sit for 6 months, 5 months now, where before there'd be multiple offers, right? That's what we're seeing. We're not getting multiple offers because lenders like me are giving the customer a payment at 6.75, and that's sticker shock for them. So what I've been doing is having classes that are teaching the listing agents to say, listen, instead of just taking off your pants on the price, go in and say, look, let's list it for the 1.2 and see what we got for 30 days. But let's go ahead and offer what's called a rate buy down in the MLS that, hey, the seller is willing to understand and participate in a buy down of the rate. If that, it's just like a marketing thing to say, look, we're willing to negotiate that type of situation. And what that has done is, in my feedback from realtors, it's gotten the buyer to actually get off the bench and go look at these 1.2s, where before the payment alone would just say, I don't want to look that high now because of the interest rates. This at least says, okay, if they do give me 30 grand towards my rate buy down, they call Mike Rivieccio and say, look, what does that look like? Well, I'm going to show you what it looks like. If you can see my screen, this is a marketing tool that basically says the rates are making buyers walk away. A temporary buy down is something that exists to where the seller puts money into an account at closing. The bank holds the money. We give the buyer a lower interest rate by 2%. Well, it's 2 to 1, meaning if it costs $10,000 to buy down the rate a point, we collect $20,000 from the seller, and then we lower the customer's rate from 6.75 down to 5.75. You follow me? I'll make it really easy. So that allows the customer to feel comfortable knowing that they have 2 or 3 years for the rates. If you look at the 30-year average, rates cycle through every 3 to 5 years anyway. This is enough time here in the 3-year rate buy down to keep the customer comfortable to know that they can refinance this property. It solves 3 problems. 1, the sticker shock of the high interest rates right now. 2, the buyer didn't have to pay to get the lower rate in that 3-year period. The seller did it for them. And 3, they're kind of comfortable paying that number that if the rates were where they normally are, they would have pulled the trigger on that property, but they're not doing it because of the rate. So the rate buy down is just a tool for a transaction so that we're all on the same page to try to get the transaction to the table. The buyer's bottleneck is removed because the interest rate is being bought down for them. The seller is getting a higher price than they would get in a high rate environment. And the transaction for the realtors and Jim's title company are getting done. And everybody's getting to the closing table feeling value, right? Everybody won. The seller got a number that they were comfortable with. The buyer got a rate they're comfortable with. Mike got a loan and hopefully a refi. So I'm a little selfish in that these rates are creating a 2-for-1 for me. And the other caveat Jim and I discussed is we're going to find a way as a lender also. I'm going to limit on a refinance when rates drop. I'm going to limit the lender fees. I'm going to get with Jim, and if Jim does the title or is willing to do the refinance, we're going to figure out a number where it's really, really, really easy for people to refi. We're going to have a plan, a refinance plan in the future for all of your customers to come to us and refinance at low cost, as low as we can make it, just to make it seamless. So
Mike, you gave us a really good example when we started. Before we get too much off the mechanics, let's just say the sale price that the seller wants is 125, like you said, 1,250,000. And in a regular interest environment, that payment might be $6,000. But
Correct.
since we're in a high rate environment, that payment is now $7,000, and that's where the buyer gets sticker shock. And at a $6,000 price point, the purchase price would be $1,100,000. So in other words, the seller would take a $150,000 haircut to get to the price that makes the buyer happy. And in the illustration you were telling us before the show, for $30,000, about the seller could buy down the interest rate to that $1,100 price point. And now the seller, instead of taking a $150,000 haircut, is going to be receiving 120 and not 150 like they originally imagined. So that 150 grand, you take 30 grand out of that, and now they're still getting their 125 price, but for $30,000, the buyer's getting the payment they wanted.
Right. So in that illustration, the point was exactly that if we can get the buyer a payment that they're comfortable with, and the seller is using some of that money creatively to buy down the interest rate to get their payment where they need to be, they don't have to take a $150,000 haircut. That number might be 30, 50, it's not going to be 150. It'll be 30 to 50,000.
I love that. That's beautiful.
There's room here, and the only problem we have is our real estate professionals need this data so they can present it up front.
Yes.
And get ahead of the transaction,
Yes.
right?
That's the gold right there. You go into your listing appointment and you're bringing that stuff to their table right at the onset, setting expectations, telling them the price might be tough to get in our current environment. And here's an illustration which shows how we're going to get close to that number and still get buyers to make offers.
Right. So we have to figure out what the holdbacks are, and we have to have answers for those up front, right? So we have to inform our sellers. Yes, the data shows this house is worth 1,250, right? However, in the last 90, 120 days with the rate environment the way it is, we're not seeing multiple offers like we used to on this same transaction because of the rate environment. Okay. So now the rate environment, let's take that off the table and say, we have a solve for that. Instead of getting the price, just like you said, down to where the customer's perception of their $6,000 payment is 1.1, let's buy down their rate and get them to that payment without the seller taking the full haircut. If they understand that day one of a listing appointment, they understand that you understand the market. And if you need to negotiate price to get your transaction done, they're going to be more apt to listen to what you have to say because you prepared them from day one. That there are problems with listings right now. Number one, the data is showing that the price is cool, but people aren't paying it because of the interest rate. That's the one catalyst. Okay, so we need more bullets in our gun in this market, right? Yep. We have to have more information. We have to have more data.
So one quick question, as an agent that's doing this, a listing agent that I have listings, what are the mechanics of how that is put on the contract? Maybe Jim can do that. Is that put as like a seller credit towards buyer's closing cost? How is that handled on the contract?
Most of my realtors that know about this and know about rate buy downs, my phone's always open. Most of my realtors will say, hey, I'm close to a deal in Evergreen, for example. I have one going on, and they'll say, everyone's off 50 grand. What does that look like? And I'm like, well, it looks like 22,000 in a rate buy down. So they're really not off 50 grand. They're off whatever they're 28,000, whatever the difference is. So they're using my rate buy down as to explain to the seller and get the buyer like everyone's working together. So what it looks like, Ryan, it's not absolute, right? It's a fluid thing. So let's say, I'll give you an example of how this transaction went so that you can see it from soup to nuts, okay? They called me and said they need a pre-approval letter for 1,150. The house is listed for 1,250. I give the pre-approval letter. I get my staff follows up with the buyer and says, oh, how'd your offer go? They call the realtor. Well, we're kind of off because of the price. Well, it's really not the price. When you peel back the onion, it was really the buyer was stuck at a payment in their head. And so the price didn't scare them, the payment did. So I called everybody and we worked it out yesterday and said, listen, if the seller gives 25 grand to buy down the interest rate, the customer is happy with the payment, this will all work out.
Yeah.
So it turned out that they're buying the house for like 1,175 and they're paying 25 grand towards the rate buy down. So a 1-2 house went down to 1,150, but we used the 50 grand, 25 on the price, 25 on the rate buy down. The seller is happy. The buyer is buying the house at the payment they like. 25 grand is going towards the rate buy down, and they just reduced the price. So how the contract looked to put all this together, the contract reads 1,175, and in section 9 of additional clauses, it states seller to pay 25,000 towards buyer's rate buy down, prepaid items, or closing costs. That's it.
Okay, so you just put it in the additional
That's
items.
it.
Okay.
Go ahead, Jim.
So we can put that in either in the paragraph 9 for additional costs or paragraph 20 additional terms. There's a lot of people just look at paragraph 20 and blush over paragraph 9. Either way, it's fine with me. What about putting this thing in the listing agreement at the onset? How would they word this in the listing agreement? And where could seller agents go to find this information before they post the listing? Because I would think we'd want to get even further ahead of the ball to educate buyers when they're making offers, not just trying to put the correction, correct the boat once it's already underway. I'm thinking like, get this thing right.
Yeah. So same concept, right? I have listing agents that will walk into a listing appointment. This stuff's mainly big on stuff like 750 and up, but even at 300,000, $8,000 or $10,000 buy down is very fair. So my listing agents that are successful at this are going into the listing appointment saying, look, this is a tool that if we need it, we need to have it in the agreement. So basically they're going with the listing agreement.
Listing agreement.
Yes, in the listing agreement, it will state, I'm going to list your house, John Smith. I'm going to list your house for 1.250, but there needs to be 50,000 or 25,000, whatever predetermined number that I actually talk to the realtors, some of them before they even list, and say, hey, that house, there's a 3% or 6% cap with Fannie Freddie, like regular conventional loans. Let's make sure the concession is around 3%, because that's about what the bank will allow on a rate buy down, is up to 3%. So 3% is a good number to put in the listing and say, look, seller's willing to list at 1,250 with brokerage A.
Yeah.
In the listing agreement, seller does also agree that there's a 3% buffer towards rate buy down if needed, like something in that, so that legally, and you guys are all smarter than me with the legal stuff.
Now let's nail this down, because I'd like to throw up an outline and have the exact language in there. We don't have to do it during the show, but I can certainly make something up and we can put it up there. But the concept is, we're signing the listing agreement. We want the seller to agree to do a buy down, so that when we list the property, the listing actually reflects the buy down amount. So buyers see that right off the bat.
Right. So I'm gonna answer question B on top of that. So when it's in the listing agreement, according to what I know, legally, the listing agent in broker's remarks can put seller willing to participate in a rate buy down at this price. So they can put some data that hits Zillow, Realtor, whatever avenues that their listings hit, Realtor.com. So it pops up. So
That would be the
helps-
public the public remarks is what
I-
gets sucked over. Yeah.
whatever. What I'm saying is, whatever data gets out there, as long as it's in the listing agreement, it tells the listing agent they're allowed to say it to the public, right?
Yep.
So
Yep.
if it's in public remarks, it says to a buyer searching on the internet, it says, this price is 1.2. And they're like, oh, with rates the way they are, that's a little expensive for me. And then they scroll down to look at the photos and they see public remarks, but seller willing to help with rate buy down. Well, that gets their antenna back up.
Right.
Saying maybe it's not too much expensive for me payment wise because of this other data.
Do you put in there, do you say something general like seller shall participate in a rate buy down, or do you say something more specific? I would think it'd be more powerful if you could say something like seller shall buy down buyer's interest rate 1 point or something like that.
Well, here's the problem is
Yeah.
being a trainer in the mortgage space. Listing agents are going to want the least amount of pushback. So if they commit to a number, I don't think they'll get them to put it in the listing agreement. If they do it like, hey, I'm doing this to protect us in case we need to do it so I can advertise it, I feel that the fact that the door's open is enough. I don't think doing a specific number
Okay.
it takes away the power to negotiate, I think.
Okay. So you just said make a general statement in the listing, forward-facing listing that says seller shall participate in a rate buy down.
Correct.
Provided the purchase price is acceptable, or I got what you're saying. You don't want to stipulate to a number.
You don't want to get to a number because that takes power. That takes away the power to negotiate. So we all want the power to negotiate, right? So what I'm saying is something openly clear but vague on the number, so that if you have 10 people look at a $1.2 million listing and 5 are serious at that number, only one's going to pull the trigger because of the interest rate environment. But with that verbiage, we might have 3 or 4 people pull the trigger instead of the one because of this tool.
Seller willing to participate in a rate buy down.
Yes.
Okay.
Yeah.
Where is there a place that a seller's agent can go on a website, someplace, Stockton website or something, to get an idea generally where maybe you push in the purchase price and then you can click a couple of different rate buy downs and then you can see a value, or is that not available?
No, because the problem is every consumer's credit profile, which I'm going to show you in the next slides of the LLPA, it's different for everybody. Because if someone qualifies for a 6.7 rate, some guy might qualify for 6.5 rate. So the buy down looks different. There's no absolute. It's all specific. So that's something that the agent would just text me and say, hey, what would the rate buy down be if I already have the customer? That's something that I have to do in my job, is help navigate that.
Text Mike to get the specific rate buy down.
Right, because it's going to be consumer specific on their credit profile, their down payments, the type of property, primary, secondary investment, like that swings, and I'm going to explain that on the LLPA on the next slide once we move on from this. So
once we break up, can you give me some examples that we can post in an outline of rate buy downs and what it looks like? Just a couple, and then we can get it out there to the agents so they can use it as a tool and maybe even use it with their sellers, but then break the ice for the listing that says seller shall participate.
Yeah, Jim, just like the emails this morning, I'll send you a chart, an example chart at 500 grand, 300 grand, and $1 million. If the rate today was 7%, if they bought it down 1%, 7,000, the rate would be X. I'll give you a clear example today.
Perfect.
All right. Does anyone have any other questions about this rate buy down stuff?
Very powerful stuff.
Yeah, that's what I was gonna
I
say.
mean, it's powerful stuff. I'm going to be using this on my, with my own sellers, the ones that I'm actually have a listing appointment here this week. So I'll be covering that. We got a question here from Mindy. Mindy, go ahead. You're on mute.
Hey, good morning. So thank you for this. Great information and great for listing tools. I wanted to use the flyer maybe to upload in the MLS documents too. If I do market it, then the agent can call me or the buyer can call me, but at least I have like this little flyer with some more details on it to make them a little more comfortable before they call me with questions or call you with some questions. But Mike, I wanted to be clear, the home has to appraise for that number, correct?
Yeah, so we're taking, Mindy, hi, nice to see you. We're taking the assumption that the list price, everything else checks the boxes. It appraises, it inspects, everything checks the boxes.
Okay, and then so it's obviously got to appraise, and then I can't market it as up to 2% or up to 3% because it really matters on not just what the seller's willing to do, it's what the buyer will qualify for.
Correct. So that's why Jim and I touched on that. I would not put a specific percentage. I would just say, hey, the seller is willing to contribute towards a rate buy down, give me a call. And then that starts the dialogue, right? And maybe I will send you a flyer specific to you because you're my buddy. And you'll have something that'll have your face on it that shows, call me for details. I have something specific for you and any other agent that reaches out.
I just want to make one point too, Mindy. You bring up an important topic, and that is when you use your listing, when you use language in the forward-facing piece of your listing, you want to use words like may or willing or things like that. If you say seller shall participate in a rate buy down, now you've locked your seller in. So if you say seller will participate in a rate buy down, seller shall participate in a rate buy down, those are dangerous words because now your seller's obligated. If you say seller may participate in a rate buy down, or seller is willing to participate in a rate buy down provided buyer, within parameters of buyer's credit or something like that. Just be careful of using those affirmative statements that lock your seller in.
And Jim, just to interrupt that, you said this before. Mindy, Jim's gonna figure out and send out an email, which I'll make sure you get, of the language that he does his research legally. Right, Jim, that we can, like some blanket language that protects everybody.
Yeah.
Okay, cool. And then lastly, what is the turnaround then on appraisal for regular appraisal right now? And then maybe my seller in the contract, I write that the buyer has to, pay extra to rush it just so we can, make sure everything's on the up and up. And hopefully if it doesn't appraise, then he's emotionally attached by then and still bites the bullet and moves forward if the rate's got to be higher.
Yeah, and these questions are what I've been getting for a month now because, Mindy, you can probably agree with me, the data is still showing the sales where these prices are higher still, like
Absolutely.
We can justify it. We can justify it, but people just aren't paying it now. So like the seller's saying, yes, my XYZ data is showing my house is worth this, but nobody's paying that because the rates are a point higher than they were 8 months ago. So I understand what you're saying. I have people that are using the appraisal contingency form that if we accept this offer, you must waive the appraisal portion of this within 10 business days. And I'm meeting that 10 days.
10 days.
So the people that are doing this buy down, they're waiving it if it doesn't get to it. So they're stuck. If they can't get the buy down rate, that's going to lock them in.
No.
Suggesting that.
No. What I'm saying is the contracts that I've been dealing with.
Just separate from the buy down. That's what your turnaround is.
Yeah, it's separate. I'm saying a lot of the contracts I'm seeing, it's saying you have 10 days not to waive the finance contingency with the rate and all that, that's separate, but the value. You have 10 days to get your appraisal and value not be an issue. So it takes it out of the equation. We still have to underwrite the file. They still have the finance contingency of 20 days in the contract, but a lot of people are adding the appraisal contingency as a separate thing, saying you have 10 days to tell us that it appraised and we're good with the number, and then you can move forward with the financing.
Yeah, perfect. No, 10 days. That's great. Thank you.
All right. All right, guys. Any other questions? I'm going to move on to something that's been in the news and people are really confused about it because we like to eat chicken soup from the news like it's going to heal us, but it's not true. And I'm going to move forward to LLPAs and what they mean. Okay.
Awesome. And Mike, I shared your contact information in the chat, guys, for everybody. So if you have anything with this rate buy down or questions for Mike, his phone number and email is in the chat.
Thanks. Alex, I'm just going to open the next one, correct? I'm not like tech savvy, so let me hold on. Let me get out of that. All right, so the next.
Is that your cell, Mike? 262-6170?
Yes. Yep.
Do you like text?
I love everything. Anything that's going to feed my kids is perfect for me. So I'm going to move on to something that's very important in the mortgage space, but not really important for everyone in the public because it really shouldn't have never got out there. I'm going to preface this by telling you that everyone called me the second the news came out that, hey, is it true that people that are more qualified are paying more for a mortgage and interest rate and fees than the lower, they call them lower class, but lower credit and lower down payment type people? The answer is yes, but it's not really yes. There was always loan level price adjustments for lower credit scores and lower down payment. And FHA and VA had upfront mortgage insurance premiums and premiums per month. That's always been around. The problem is, it's not a problem. In January, FHA and VA had about $90 billion of excess funds in what's called the dump bucket. They use that money in case of default so that the fund doesn't dry up and they can't give FHA and VA loans, right? I'll make it as simple as possible. We call it the garbage bucket for bad loans. So they have so much money in this bucket that they can't spend like government money because it's separate, that they decided that they would lower the insurance premiums for the VA and the FHA. They would lower the premiums starting January because they didn't need to collect this much money because they already have excess funds. So in the last 4 or 5 years, conventional got so aggressive with 3% conventional down payments that nobody really used the FHA because there was no point, right? Because if you can get a conventional loan at 3% down, why would you get an FHA loan that has mortgage insurance up front and mortgage insurance every month? That doesn't make sense. You would just get a conventional loan with 3% down and pay the mortgage insurance monthly. However, the tides turned when conventional rates went through the roof. They had the highest, quickest increase in 100 years. So FHA looked more attractive because the FHA rates are always like a 0.5 to 3/4 of a point less than conventional. They always have been. But when conventional rates were so low, there was no point in going FHA. So FHA said, wow, now that conventional rates are so high, our transactions were down for years and years and years. We have all this excess money. Let's charge people less money to get an FHA and VA loan because we have all this excess funds, because conventionally it's harder to get a loan and the rates are high. So now the FHA usage is up 14% already in the first 2 quarters of this year than it was all of last year. So people are using the government FHA and VA loans now more and more and more because they're more attractive. And they're more attractive because if you look on my LLPA screen right here, on purchase money for conventional loans, if someone has if you look to the left, 740 to 760 credit score, if you see someone borrowing right here up to, let's say someone's putting 20% down. In the old days, if you had a 720, 740 credit score on a conventional loan, you wouldn't have to pay any points. You would just put your 20% down, you would get your 5.5% rate, and you wouldn't pay this 0.875 or 125. Now, don't confuse that with adding to interest rate. This is not. This is the regular interest rate at 5.5%, used to cost $0. Now, if you have a $100,000 loan, and you have a 740 credit score, it used to cost you $0. Now you have to pay the lender, me, $875 to get that same loan that used to cost you $0. So it's called a loan level price adjustment, meaning people's credit score and how much they're putting down. That's what the levels mean. It's now costing someone $875 per 100,000, where it used to cost $0. The reason for this is the FHA and VA showed how much money they have in their dump bucket, you know, the bucket that's for loans that go bad. They felt that Freddie and Fannie, who backed conventional loans, Fannie Mae and Freddie Mac, didn't have enough in reserve. So when the government did all this, you know, smart people stuff, they said, Fannie, Freddie, for you to keep backing loans and have the government back you, you have to charge more money to the consumer, even with good credit scores, to get the bucket, your reserves up. So FHA had too much money and conventional didn't have enough money according to these charts. So on the news, when they say, hey, people with great credit are paying more for money, well, they are. They are. Because conventional got more expensive. So let's take an example of why, let's say somebody, look here, somebody that's putting 10% down that has great credit, let's say 700 credit, right? If someone has 700 credit and they only want to put 10% down, they have to pay the bank 1.25% or $1,250 up front to get this loan. If you go to get an FHA loan, they lowered their upfront premiums to 1.25. So if you can get 6.5% interest rate with 10% down on a conventional loan, why wouldn't you just go ahead and get an FHA loan at the same fee at 5.5%? So do you see what I'm doing? It's cheaper to do an FHA loan with these new LLPAs. That's my point of what they are and what they mean. So it's not people that have great credit are paying more, which they are. They have the option to go FHA and pay less. They just choose not to because they don't want that monthly mortgage insurance to go on for life. In FHA loan, you have the upfront premium of the 125, where now conventional has the upfront premium. But now you pay mortgage insurance every single month for the life of the loan or until you refi. Where on a conventional loan, if you put 10% down, after 2 years or you get to 80% loan to value, you can just put in writing to the lender, to me, and say, I don't want to pay this mortgage insurance anymore. I think my house appreciated and I don't need it. So conventional, you pay more for the interest rate up front than FHA, but the mortgage insurance falls off. So these LLPAs are pushing people more to go to an FHA loan, because if they're going to refi anyway, because these rates are so high, they might as well get the FHA loan and pay 1% cheaper for the rate for the 3 or 4 years it takes them to refi, than get into a conventional loan with great credit paying this LLPA. Follow me?
Yeah, and it almost sounds like you got to educate your buyers earlier on the concept of get in for a few years and refi.
In this environment, that's the only thing I educate every single day, all day.
Yeah.
Is these loans we're doing right now are literally, what is our plan 3 years from now for the house? Not right now, because these are like bridges. These are bridge loans.
Right.
Because just like 2020 and 21, where over 60% of the mortgage holders in this country refinanced. Is that not insane?
Yeah.
Say that again. 60?
60% of loans that were eligible for refinance in the United States did refinance in 19, 20, and 21.
Wow.
I know that's another problem that you have, that I have, right, with some of my sellers, right, is they're locked into these low rates. And they're like, Ryan, we sell our house, and like, how do we go and replace it with these higher interest rates? Now I can mention the rate buy down, like, you know what I mean, which is a great thing too. Say, hey, I can start a conversation with some of these sellers, where you'd be purchasing after you sold, of doing the rate buy down. But yeah, I mean, that definitely.
Ryan, that's a really good point, right? So as a seller, you can use the rate buy down as a shield to try to support your price. And as a buyer, you could ask the seller to participate in a rate buy down so they get their price, but they're taking a little bit of a haircut for the rate buy down. Now the buyer feels good.
Right. So for all intents and purposes, this data is just because this was in the news for 6 weeks that everyone's getting screwed if you have good credit. It's not true. It's just there's a better option if you have good credit. I have 750 credit score people doing FHA loans now because they just make more sense. So I'm not going to spend any more minutes on the LLPA because it's really just a lender thing. I give people the best rate they can get for the price they can get it. They like their payment. I close the loan. That's my job to deal with this, but this just tied in a little bit with why the rates are a little bit higher and why it's best to have that rate buy down. So you have something to tell your seller and some value to bring. Okay.
What's the single soundbite that a realtor can tell their buyer on the LLPA issue if the buyer brings it up? What's the single sentence soundbite?
Call Money Mike. Like you have to call me because I give every buyer a breakdown of an FHA loan and a conventional loan with the points, what it would be for FHA, what it would be for conventional, and over 5 years, how much that loan actually cost them out of their pocket.
So I think so the answer would be, if the buyer brings up LLPA and we're paying too much, the single soundbite answer is no, you're not, and call Mike because he can tell you why you're not.
Right, and we have to compare it with the two products now. Before, conventional was the only way to go for 5 years because rates were low. Now the FHA has become more competitive with lower rates and higher ratios. So cool. So the next topic, because we've got a lot of good data here, is I talk to literally 25 real estate agents per day. Like that's my job, is to make sure they're happy and that they know that I have their back, and that if they have a customer, I'm going to get their transaction. They do their inspection, then they get out of my way, hopefully, and let me do my thing. Okay. So the last piece of information I wrote down, and I told Jim and Rye that I would share, is I have information from all these realtors I talk to all the time on what can I do today to try to make some money, right? As a realtor, what are other realtors doing, and talking to Mike Rivieccio about how they can make money today. So I have a few ideas that are working throughout this state, because I have offices in Fort Myers, all over the place. And these are some things that are working for my agents down in the Keys, down in Panama City, over in Fort Myers, in Jupiter. This is just what feedback I'm getting. And I'm going to spend 3 minutes on this. Basically, this is kind of annoying, but we're gonna say it anyway. We have to go back to work, right? We had a free 5 years of the phone ringing and Realtor.com and Zillow handing us people from New York and Connecticut, New Jersey, ready to buy, no questions asked, sight unseen, full price, just get me the property, right? We all were spoiled with that for 5 years. That game is over. Okay, that's on the bench. That game is over. So the realtors that are being successful, that are partnered with me, are doing a couple things. They're back to setting schedules. Are you making calls to your database? Are you sending text messages every day to past clients? Are you organized in your pursuit of your past database? Like, do you just stick everyone in a CRM and hope it sends them a happy birthday card to open? Like, if you're doing that, you're not going to survive. Like, you have to physically pick up the phone. You have to hit your sphere of influence. How many times have you been to a bar or to a lunch with your girlfriends you haven't seen in a while, and they're like, oh man, Randy and Mandy just bought a house, and they're sitting 4 seats down from you, and they just forgot you were a realtor. So they used the listing agent, they just used some Tom, Dick, and Harry because you were not in front of them. And you didn't text them once a month saying, hey, I hope all's well, just checking in. Like, we really have to dig back to our roots and figure out where we got our business from the past and double down on the wins, right? So if your sphere of influence, there's a couple apps where you can actually download all your contacts from your cell phone into an Excel spreadsheet. Did you know that? You can actually just plug your phone in and dump all your contacts, name, email, and phone number, like whatever is in your phone, dumps into an Excel spreadsheet. It takes 10 minutes. I have realtors that actually did that, and they literally had 2,500 contacts. They started calling 20 people a day, just saying, hey, I dumped my phone and saw your name, and I haven't talked to you in a year. I was just calling to say hello. And you're not asking for business. You're not doing a call to action. You're literally just, if you do care, I hope, you're just catching up. And because we're a little slow right now, take from 10 to 12:30 and call 20 people a day. And they're going to ask you what you've been up to. And you're going to say, I've just been slinging real estate or doing my thing, selling houses, doing the best I can. And they're going to remember that you do that for that, I don't know, 18 minutes. But if you do that and you have a system of calling your past database in your sphere of influence, make it 20 people a day from 10 to 12 or 5 to 6 or whatever's comfortable for you. I guarantee you out of those phone calls, you're going to get 1 transaction a month, right? Guaranteed. If I, as a lender, called my database and used Facebook and post, Mike closed another one, blah, 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 people just know I'm a mortgage guy. That gets me 2 to 3 transactions per month. I do not do it well. I do not call 20 people from my database every day. I don't do what I tell people to do. I'm human, but I'm closing 45 loans this month. Not bad, right? In this high rate environment, the world's going to hell. We're all going to die, but I'm closing 40 loans and I'm going to beat last year by 50%. So this market's not that bad. The deals are happening, just not as high and not as much. But with data and with information and with our intent being correct to help people, you will close deals. The problem is you have to call 100 people to close 5 deals, where the last 5 years you called 7 people to close 5 deals. It's all a numbers game. You just have to get more numbers. So
and I think that little soundbite about the rate buy down, are you considering buying? Are you considering selling? Just as like a soft sell intro, we have tools to make the high interest rate environment acceptable to do business in. Or, I have tricks that as a realtor, that's your soft sell intro.
Exactly.
Yeah, right. So a couple of things to take away. Set a schedule, an hour and a half a day, to touch your past due database, your old leads in your CRM. Your CRM is not making you money. You working your CRM is making you money. Your CRM is not sitting there with its feet up saying, oh, I'm going to make Ryan 5 deals this month. You have to work it or it doesn't work. So everyone thinks, oh, I have a Compass CRM or I have this CRM. I put that lady's name in there. She should be a buyer automatically or a listing. It's not how it works. You have to work the data. Number 2, the jobs reports are out. There was 339,000 jobs added in May in this country, and they only expected 190,000. like there's so much data you could just get from the internet about the economy. Sellers love hearing that shit. There's more people for jobs. There's more people spending money. Like, there's not all bad news. There's good news, but we only look at the bad news. And my wife taught me a trick. If you spend 1 minute writing down all your feeling words, 80% of them will be negative because that's how we are. But you can change the way you think if you actually admit that. Spend a minute later today, write down your action words, your feeling words, see what it looks like. If they're all negative, well, you're not going to make money because you're freaking negative. And start changing your thinking. Number 2, cell phone dump. Find out who you're calling, why you're calling, and get them information. We have data, use it. Number 3, jobs economy. People love hearing about it for like 1 second, so don't harp on it. They don't want to hear facts and data and all that. People can't comprehend stuff they don't understand. So find something that they like to hear about and talk about that. And talk about you. People love hearing wins. Then shut up and listen to them talk. People love hearing themselves talk. They don't love hearing us talk. They love hearing themselves talk. And know that I have niche products, okay? I'm doing 5 loans this month that I've never even looked at their tax returns. It's a bank statement only loan, or the property actually debt services itself, which is really cool for self-employed. I have some really cool products. My rates are competitive. I have to do a little plug because I run out of breath and I do talk too much. So I appreciate the time. I'll let Jim take over for question and answer, and I appreciate being able to share this with you today.
Thanks, Mike. That's awesome.
So I wanted to touch briefly upon the value that we add, and then Ryan, you could give a little plug for Real Trade. Well, but first of all, do you guys have any questions? And do you guys have any questions of Mike before we part company? Chat, 2 chats. No, I don't see any hands up.
We covered a great range of topics today, Mike. Thank you so much.
Sounds like you did a good job, Mike. Nobody has any questions.
All right, y'all. I appreciate the time. Have a great day. Thanks.
I got one more parting question, Mike.
Yes, sir.
Can we bring you back on, because we're seeing a lot of foreign buyers still? You had mentioned something when we were talking about today's topics about discussing products for foreign buyers. Is that something we can touch upon in the future?
100%. We have a debt
All right.
service coverage product that I'm using for Ryan for 3 Canadian buyers right now, as a matter of fact.
He's been working my Canadian buyers. He's been doing a great job with it as well. So
you mentioned something about a product where the property debt services itself. And if we can learn more about that and more about tools to serve the needs of foreign buyers, that'd be great.
Jim, if I could see your face every week, I would be here.
all right. Let's do a quick. Tell them about New Path Title and Title Leap, Jim, real quick.
Right, real quick.
Real Trade.
James
We'll wrap
Brown
this thing up.
Law, boutique law firm. We help agents with leasing,
Joe
eviction.
and David.
Oh, we got somebody with a mic on.
There we go. It's good.
We
now.
help people with evictions, lien mitigations, problem title that other title companies can't close. We have New Path Title. New Path Title on their webpage has all kinds of great tools for agents, including virtual home tours, 24 access 7 to me. And now we're doing Title Advance. Title Advance has been a wonderful tool for agents going out on their listing appointments. You can go to titleadvance.io. titleadvance.io, order a title advance, see what's encumbering your property before you go to your listing appointment. You walk into that listing appointment with some information like Mike gave on rate buy downs, a title advance, and now your seller is going to remember you long after the listing appointment and choose you as the listing agent. It also smooths the road to closing. Ryan? Oh, and Title Leap. Title Leap is a great tool, saves realtors time all the way to the closing.
Awesome. I want to give a big shout out to you, Mike, and you both, Jim. I use you both, do amazing job with my clients. Big fan, actually, of Title Leap. It's like a transaction coordinator that keeps track of all your drop dead dates, everything in one place. You get notified through email, text on any kind of updates on the closings. Never been smoother. Big fan of it. And Mike does great with my foreign buyers, and my other buyers work on a bunch of deals right now. Hey guys, agents, check out Real Trade. You can just Google Real Trade or go to realtrade.io. Got you free leads. We got thousands of buyers and sellers that are looking to connect with agents like yourself. And the best part, it's free for agents. Big thing, we have a whole social media component where you can connect with not only other agents to help sell properties quicker, but awesome service providers like Jim and Mike are on there. You can connect with them. They're like in your Rolodex. They're one of your colleagues. You can message them right there for any kind of questions and see updates on the social feed from other agents and from service providers. And now we have buyers and sellers there now that can post their needs and connect with them and connect with agents on Real Trade. So
Ryan, as much as the vendors are great, the best thing about Real Trade is the shortest route to the double dip, right? So you got buyers that are surfing Real Trade, they can get right in touch with the seller's agent. So if you're, yeah.
Yeah, no, I just had an agent. I had an agent actually from Sutter Nugent just called me last week, and he just got a direct deal. He made an extra 20 grand. I mean, right there for 10 minutes of work, guys. Even if you did that and didn't get active on the social, it's pretty amazing. So.
All right, you guys, go ahead and text me for the next set of the next discussion you'd like to have. It'll be in 2 weeks. If you guys don't have anything you'd like to throw out there, Brian and I are going to brainstorm. We've got tons of stuff that agents are calling me about all the time. We'll let you guys know what's coming up shortly. And if you don't have anything else, Brian and Mike, we're at 56 minutes. I'm going to call it a day.
Have a good day, guys. Thanks.
Go get them.
Thank you.
It's been a pleasure.
All right, bye.